Good day, fellow investors. The best research is field research. So I'm here in Amsterdam to test the marijuana sector to find the best marijuana stocks. I'm going to test every product. I'm going to interview people to see what's the best. So let's get stoned. Sorry, let's find the best marijuana stocks. Okay, now that I have recovered from the field research, we can dig into the economics of the cannabis industry, the weed sector, weed stocks. And we're going to do that by analyzing the key factors when you look at the sector and also discussing it through analyzing Canopy growth, which is, I think, the biggest company in the sector, the biggest stock. The key things to watch when you analyze such a sector are whether there is a moat, whether somebody has an advantage, what is the growth expectations, and the actual real growth that comes after. The management is always promoting huge things. So we'll dig into the sector, what can happen, and see whether it is still a good investment or it will end up just like an investing fad, which we have seen plenty of in the past, starting from 3D printing or whatever. So let's go. So cannabis stocks have surged. Canopy growth, as I have said, is 10 times or a little bit more, even more, in less than 2 years. So huge growth. And now, is it a trend that will continue to grow, or is it a fad? And you see then that declines of 90% are not unusual, as it has been the case with 3D printing that I said. Let's dig deeper. Now, this is what the companies expect. Based on some estimates, they see the cannabis market in Canada between 5 billion and 10 billion per year. So just the lower market value translates into yearly consumption of 770,000 kilograms, 770 million grams. If you can make 3 joints per gram, that's about 2.2 billion joints smoked in Canada per year, with the price approximately 6.5 per gram. So to put this into perspective, they say that the beer market in Canada is 8.7 billion. So the companies expect beer and weed to be at the same level in Canada. Well, those of you who are from North America can see whether that is the case now and whether there is real potential for that. So the management expects to hit market of 10 billion, so weed and beer would be equal. Now, going back to beer, as they say it's like beer, if the beer market is 8.7 billion, if I take Heineken's price to sales ratio of 2.3, it means that the complete market capitalization of all the weed stocks in Canada should be around 20 billion. So Canopy growth is now already close to 5 billion. Add all the other producers, add all the producers that will come in the next years, and you are way beyond the 20 billion on a normal price to sales ratio for a commoditized product. Let's dig deeper. As I said, the price is the key. The expectations are $6.5 per gram sold. However, the average sale price for Canopy in the last quarter was 8.3, up from 7.36 and 7.99 in the quarter. And these are excellent business mechanics. So if you can sell something at 8 and the weighted average cost per gram before shipping and fulfillment was just 1.03. So this is an amazing business. They are selling something at 8 and cost of production is 1. Wow, I want to be invested in that. The company must be extremely profitable, huge dividends, continuous growth, wonderful business. Let's check. So first, let me start with the prices. These are the prices in the Netherlands. We have Dutch weed, which is around 10 euros per gram, and foreign weed, which is around 5 euros per gram. These are retail prices, which means, going back to the $8, which means the Canopy is selling retail, which is very hard to do because the markup is usually 150%, and on foreign weed, 5 euros, the normal selling price, if I put the markup of 150%, would be around 2 euros per gram, $2.5 per gram wholesale. So this is 75% lower than what Canopy is doing now. And this indicates that what's going on in Canada is not yet a healthy, normal cannabis market. A healthy, normal cannabis market is a commoditized industry, and even Canopy is acknowledging that. Let's see. In the management discussion, they are saying how they created a new company, Vert Mirabel, together with Lesser's Stéphane Bertrand, which is a large-scale tomato greenhouse operator in Mirabel, Quebec. So they created a company with a greenhouse company, so there is no practical difference between growing weed or tomatoes or other vegetables. And that's something, when you look at the long-term trend, then you have to see, okay, is there a difference? What is the moat? What is the business advantage? Perhaps the management is so capable that the returns will be great. Let's see. Before that, just touch on the price in the mature US markets where it's legalized, where it is allowed, mostly private producers there. So $1,600 per pound, which means